base erosion and profit shifting.
Yeah, it's interesting, hey? Sounds really complicated, but it's about making money in one place and paying less tax in another. So if you're a business that's operating, let's say in the UK, let's say Facebook is huge. It paid last year something like $4,500 worth of tax. So the British Exchequer looks at that and says, we thought we'd get more than that.
And rightly so.
And probably true. Google have just done a deal with Her Majesty's Inspectors of Taxes, and they've agreed on $130 million for the past 10 years. Now that sounds a lot of money.
Not over 10 years.
Yeah, but when you think they did $4.5 billion turnover last year, and $4.5 billion, if you sort of wind that back and say they did 10% on sales, that's $500 million. And if they did $500 million, they ought to be paying in 1 year alone a couple of $100 million. So the 10-year deal is not a bad deal, but that really means that these bigger businesses that can play games across national boundaries can shift profits about. So you know, you put your head office in Ireland, and the branch office in the UK has to pay management fees to the head office in Ireland, which lowers the UK profit and makes the profit in Ireland, which is a lot lower in terms of corporate tax than it is in the UK. And so people get a bit crinkly mouthed about it, and as businesses globalize, it's getting worse or losing more and more. That's the base erosion as a result of profit shifting. And that's
this is the big corporate stuff, isn't it?
Well, it's big corporate stuff, but it's also cross-international boundary transactions. So you want to buy a dairy farm, can't think why anybody would these days, but you know, you want to buy a dairy farm,
it'll come back.
And you want to buy it from China, and you can borrow money at 1%. You can afford to pay quite a bit more for that bit of dirt than the New Zealander can, who's going to be charged 5, 6, 7% on the same borrowing. And so that international game of where you borrow the money and where you buy the asset becomes something that impacts the tax shifting and the business environment.
Would there be many New Zealanders who are borrowing offshore to get that advantage?
Well, I think there was some offshore borrowing that the ANZ sort of suffered a little bit about a few years ago, and they pushed a lot of that offshore debt into the farming community, and there were some ructions about that at the time. But clearly, if you borrow in US dollars to chase a low interest rate, you run the risk of the exchange rate moving against you when you've done that borrowing. So anybody who's borrowed in US dollars in New Zealand right now is sort of feeling the pressure somewhat, because the currency's in that mid-60s range compared to the high 80s where it was a couple of years ago.
And then there's the futures market, and that's another whole chapter, isn't it?
A futures market for
currency.
For current, well, I mean, that just makes that game much more difficult. And this is the discussion of, is the financial sector a servant of the real sector, or is it playing with itself? And so a lot of this derivative stuff and the futures, is the financial markets playing with the financial markets and hoping when the music stops you're left holding something.
What are the world markets doing, John?
Well, we've had the sell down. There's been a bit of a rally in the past couple of weeks. The low oil price, which we all thought we would like at one time, is sort of indicating that there's not a lot of confidence in the real economy going forward. We've seen the introduction of yet more negative interest rates, which is central banks paying banks or charging banks for having money on deposit, which is a bit of a pain. But we've got now Sweden, Switzerland, Holland, Japan from memory, who are all in this negative interest rate area. And that's the problem, is when we went with the quantitative easing and whatever you call it, printing money, that was the central banks trying to stimulate economies. Well, when your interest rates are very low, a cut in the interest rate from 7/10 of bugger all to 8/10 of bugger all really doesn't make any difference.
It's still bugger all.
It's still bugger all. And so they need to do more, but they were pushing that money into the banking sector, and it showed itself in asset markets. Houses, we all know about Auckland, equities, stock market booms, And we've seen some of that now unwinding, and the worry is, what do you do next? If the real economy doesn't fire, demand doesn't move, we've now got this output gap, i.e. that we've got more capacity in the economy than it's actually demanded in terms of consumption, and we end up in this sort of slowdown generally. And confidence ebbs, and confidence ebbs tends to push that process. So right now it's on the cusp. It could go either way. Over the past week things have improved a bit, and hopefully they'll continue to improve until we have the next nightmare.
Exactly. So New Zealand, I mean, you've trickled into New Zealand.
Yeah, New Zealand's that. It's still a worry in terms of the dairy payout. I mean, New Zealand dairy farming is critical to New Zealand. We all know that. And the lower for longer in terms of the payout is tending to what's coming through the numbers now. Futures market for milk suggests that the auction overnight tonight will come back again. We'll wait and see what the morning brings, but you know, another 10% down simply reinforces that lower for longer in terms of the payout.
So the currency though, that's helping.
It's helping a bit. We've been into 64, we're currently about 66 and a bit. You know me, I'd like it lower for longer in terms of currency.
You'd like the old days of the 40s and 50s.
Well, I mean, that's probably not realistic, but I'd certainly like to see low 60s, high 50s. And that's good for my businesses that are exporting. But that said, you know, where we are now is a damn sight better than it was when we were in the 80s.
Reserve Bank, what are they expecting or chasing or doing?
Yeah, the Reserve Bank's sort of feeling the pressure. It's built its world around chasing inflation, and they're looking everywhere for it and can't find any.
It's looked under the chairs.
And they just search around for inflation and can't find it, so we just have to sort of change the measure. We won't use headline, we'll use core inflation. There's a bit more core inflation than headline, and we won't count the traded sector because that's deflationary. If we add the traded sector to the internal sector, we actually end up with lower inflation overall. And oh dear, we'd have to cut interest rates. Oh, and if we do that, what happens to the Auckland housing market? So we go back to my long-term position. We need central bank policy that can actually push back on asset markets. Doesn't matter whether it's houses or equities, we need to be able to push back on it, because if I can borrow as much as I'm willing to take on the debt, no limit from the lender's side, and so's anybody else, we're going to compete over that limited asset called real estate. So prices are going to go up because at that part of the market, there's this competition between people who've got the capacity to borrow. They'll continue to borrow. That pushes prices up.
But the Auckland market is softening.
It's softened of late, but it's softened off a very high level. And let that continue, it would be wonderful. But if the Reserve Bank were to cut interest rates now, how much impact would that have on the softening of the prices? You don't know until you know.
Until you know, exactly. Very briefly, Europe, what's happening there as far as refugees and such?
Well, we've got the talk has sort of slowed down a bit. They are slowly getting their acts together. But end of the Schengen area, you know, forget borderless Europe anymore. It's starting to tighten down. So there'll be border controls between places that in the past you just drove through. Now we're back to the old barriers again that were there sort of pre-98, whenever the Schengen zone came into existence. So we're into that sort of border controls, checking at the borders. Are we going to do this? Are we going to let people in?
So the EU is really confused.
Yeah.
John, thank you very much indeed.